Thank you so much for joining us today. I'm Marlon Bowling with you as we get ready for our daytime session here on the final trading day of July of 2017. Where has the year gone? My goodness. We are almost into August already. So do want to take a look at what to expect in the grain and livestock markets here today by visiting with Rich Nelson. He is with Allendale Incorporated in McHenry, Illinois. He joins us on the phone right now. A downward momentum last night on the Globex trade here, Rich. In fact, we can take a look at some of the numbers while we're talking here. But the corn was down roughly a nickel or so overnight, and we had double-digit losses in the soybeans. Is this all weather or what's going on?
I do have to say this probably is a weather issue. In fact, as far as the outside market issues, this crude oil market topping $50. Interesting to see that we're not finding any good support as far as that influence for us on the grain side of things.
So let's take a look here. Corn about 5 1/4 lower at last check at 369 on the September contract. Your new crop December now 5 1/4 lower at 382 3/4, about 1.5 pennies off of our low from the overnight session. So definite solid weakness all the way across the board there on the corn. On the soybean side, of course, we're getting now into that critical time of the year. August is the month to watch, and boy, as we get into month of August tomorrow, we are going in there on a downward slide on the soybeans. Down 14 on August. We have November down 14. $9.99 now per bushel on the overnight trade. So we have the first 3 months under $10, Rich.
No doubt about that here. As far as the overall viewpoint, though, we're still trading our general sideways range. We've been in here for a few weeks, and certainly on the current trade, though, we are moving on the lower end of this sideways trading range here for the most part. As far as the bull side, we did leave a gap here on that December corn, 384. I believe it was 384.5 or so. Is where that's at. So maybe a small rebound at some point next couple of days to fill that gap. But in terms of the short term, no doubt that we're not seeing much great news in terms of this current market activity.
Let's look at the wheat and see how the wheat traded overnight. On the wheat, we had Chicago, September, down 4 1/2 at 476.5 early this morning. And if you look at the Kansas City market, here we have September down 4 1/2 as well at 476.5. In Minneapolis wheat, we have September now trading 6 3/4 lower at 733 3/4. Are they just playing tag with corn and the soybean trade right now, or do they have their own set of fundamentals that are pushing the wheat markets down?
For ourselves, we are suggesting that as long as the corn and soybean side does not have a strong underlying move higher going as far as a current trade, that this wheat market probably can step back. One of the things we talked about at our conference here last week was this idea that, yes, we have tightened the U.S. wheat supply a little bit here, but we still haven't changed the overall story for the world. And therefore, these type of gains, these supply-based gains, probably going to be short-term selling opportunities in the big picture here.
Okay, now I did have a news item that just came off the wire from USDA here this morning, and they are showing that we had an overnight sale of corn that was sold to, let's see, Colombia for 2017 and 2018. It looks like it was 150,000 tons of corn. Yet that announcement came out, and I did not see any bounce in the corn market this morning at all. It's like it completely ignored that.
That sure is right. And, we had to go back to our records and find out how important Colombia is for us, because it sounds like an unusual sale, but actually Colombia is our number 3 corn buyer as far as old crop, and they expect a very strong 4.2 million tons of old crop so far. So this simply looks like they're really getting an advanced interest as far as the new crop discussion now.
Yeah, you're right. You just don't hear it mentioned that much in our daily updates through the course of the year. So interesting sale for the corn. It can't hurt to have 150,000 tons sold overnight, that's for sure. Rich, I'll bring you back here in a moment. I want to get your thoughts on what to expect in the livestock trade. We had a downward slide heading into the weekend last Friday, and we also had some cash market updates. We'll take a closer look with Rich Nelson when we come back. Well, we're talking with Rich Nelson of Allendale Incorporated right now as we get ready to kick off our trading week on our daytime sessions. Remember, it's the final trading day of July of 2017. And Rich, as we get ready to start out the futures trade, just the fact that it's the final trading day of July, does that mean we can't expect about anything in the trade today?
It's certainly something we could possibly see. As far as today's discussion, without much of a big driver, we wouldn't expect to see that much of a big move for today's discussion. Of course, last week we did end on this cash beef side of things here, kind of mixed, down 69 cents for the week as a whole for choice, but up about 202 for select. So we would expect more of some mixed trade as far as today's open here.
Okay, so let's take a look at our livestock summary from Friday afternoon, according to USDA, and we can take a look at our live cattle trade. Basically, the market was holding relatively steady, maybe just a touch weaker, around 117 in a light trade around the Midwest. And on a dress basis, we had the market anywhere from 185, I understand, to 189 per hundredweight. That would be steady to maybe a couple of bucks lower, depending on what you actually compare it to. The numbers, they were not too significant. In Kansas, we had about 900 head. Nebraska did actually move about 6,600 head on Friday. We did have Iowa coming in with almost 8,300 head, so it seemed like the vast majority of activity was in the northern plains.
Certainly the case here, and really important for us to point out that we've now retested the low posted this year for cash cattle. These exact same prices were seen in the first 2 weeks of the year back in January, and then again about, in fact, I want to say about 2 or 3 weeks ago as well. So we are testing the lower end of the trading range as we kind of develop this idea on the rising supply situation on the cattle side. But as far as today, we'll see what happens here. As far as the negative influence from last week, I think this issue regarding the Japanese beef story may be something to have some concern for us, but probably not a major driver as far as new information for us here from here on out, though.
And for those that may have missed that, when you talked about that last Friday, you might want to recap that a little bit, just to explain how that might affect the cattle industry here.
Now, as far as the Japanese beef story, Japan has some various safeguards, they call them, as far as import numbers. And if it's imported beef, whether it's fresh or frozen, they each have their own separate quantities where if you have an import, no matter who it's from, that import level from here on out would therefore have some higher tariffs. Now, as of Friday, Japan enacted a 50% tariff now instead of 38.5% for U.S. frozen beef, as well as a few other countries. That may slowly limit what has been a very, very strong customer base for us here in recent years.
Technically speaking, on the cattle and the hogs, the charts are not looking all that great right now, are they?
No, it's certainly not, and that's something we do have to recognize as we go into this late summer, fall period, and we are coming up to the time of year where we now have this contra-seasonal supply flow on the cattle side, where we have the highest supplies offered as we go into late summer, or in this case, it won't be till September or October we hit the peak supply for the year. So we are planning now, as far as the markets, they're planning to basically try and price out the worst of prices we're going to see in the coming months here.
Lean hogs, some folks are saying that they think it's in danger of really showing the bottom, may really be falling through, because it's really at some critical support right now after falling a lot here in the last 4 weeks.
That's actually a great discussion point there too. We talked about this seasonal issue on the cattle, but actually on the hog side, it's even more pronounced. We're now just a few weeks away from our low point as far as slaughter for the year that was posted back in, I want to say 2 to 4 weeks ago. So as it stands right now, this rising supply argument on a supply basis seasonally is important to watch. And also, we're all talking about this fourth quarter, what could be a new record pork production up ahead. And we're going to try and balance this out with the good news from the 2 new plants we have lined up in September. So for the short term, still talk about a top here in the market, and all pricing, or all eyes right now on this fourth quarter pork production ahead.
All right, thanks, Rich, for all the information. Good stuff. Rich Nelson of Allendale Incorporated in McHenry, Illinois. We're getting within 5 minutes of letting the bulls or bears loose.
Another day about to begin.
Yep.
Thank you very much, Mark.